With high inflation going on and at the same time a recession, you might be feeling quite a lot of anxiety about your money right now. Will I be able to buy more or less with the currencies that I own and I'm paid in? Whether it's tomorrow, in 1 year, in 10 years? Will I be able to pay my expenses, my loans, my bills? My view is that you should have more than one currency that you own or earn money from in your portfolio. Let's dig into why I think that and which currency you might possibly want to own. US dollar, Chinese yuan, Euro, Bitcoin? Let's find out. My name is Greg Anjalbert. I'm a life and personal finance coach, and I share what I know about personal finance and coaching on a cup of coffee to help you live a life of purpose and build up your wealth. What gives a currency its value? The word fiat comes from the Latin and essentially means let it be done. It means that those currencies are created by decree, and they only exist because we place some trust on the institution which are basically printing and emitting this currency. Depending on where you are, this might be the Federal Reserve in the US, the European Central Bank, the Reserve Bank of India, or the People's Bank of China. Why would you trust those institutions? Well, actually, you do not trust those institutions directly. What you trust is the countries or group of countries which are backing those institutions. Let's take a look at what makes that trust that we have. It's the quality, stability, and the independence of the central bank. This allows for sound monetary policy, which does not depend on whomever is in power at the time. Also depends on the stability of the political system and therefore of all policies coming out of the country. Here, the key word is predictability. Whether it is a democracy or an autocracy, it does not matter. It is a question of how much decisions taken by a country are predictable. How the country or group of countries backing the currency are doing economically. This is complex, as it is a mix of where they are in terms of wealth today, poor, middle, developed, and what their prospects look like for the future, whether it's growth or decline. How much a country has control of its own currency. This might mean that exchange rates fluctuate a lot or they don't. This depends on international reserves that the country has and the size of the economy itself. There is one trump card, which is whether it is a reserve currency. Then a disproportionate amount of trust is placed, which means that much higher valuations than all the preceding factors would dictate help sustain a currency. That is the case of the US dollar. Also, if you want to understand why we have money in the first place, check out this video here and here. Here I explain where money is coming from and why we put trust into money. What makes a currency strong or weak? Essentially, all the elements of trust that we've talked about with regard to the trust we give to a currency are exactly the same elements that we need to take into account when we consider the value and the strength of a currency. How do you judge the quality, stability, independence of a central bank? Quality is hard to judge, though it depends on the philosophy of the central bank, what are the economic tenets that they are following. Nowadays, most of the central banks tend to follow the same type of philosophies, and it's mainly to fight inflation and to promote some moderate economic growth. If we look at independence of the central banks, and the World Bank is measuring this, they have a factor from 0 to 1 that you can see on this screen, which is giving you an example of a few countries and where they stand. For political stability, we can use the globaleconomy.com rating, which is using the Economist Intelligence Unit and the World Bank as a basis. You can see the top 20 countries on the screen as of 2020. Economic performance is complex because it is on one side the stock of economic performance which has already been achieved, which is a stock of value in the currency, and also futures prospects which dictate where the currency is going to go. For that, the country power index, which is coming from Ray Dalio's latest book called The Change in the World Order, is actually as good as it gets. It will be updated every year, and it is something that has more than just economic power, but a lot of the parameters which contribute to that power index are a lot of economic factors. For the countries having the most international currency reserves that allow them to back their currency policies and maintain the strength and the stability of their currency, you can see this on the screen. This is coming from Wikipedia, which has an updated list of the top 20 countries in the world for that. Finally, for the trump card, we can look at which currency in the world, which are the currencies in the world which are owned by most of the other countries all put together. You can see this on the screen, and you can see that as of the latest numbers, the US dollar is about 58% of total world currencies which are owned by different countries. So it is a clear winner here. Does this video resonate with you so far? So you know what to do, and don't forget to subscribe and put the notifications on if you want to receive more content like this. And do not forget to check out in the description of the video the other YouTubers who are talking about the same concepts. There's a lot more to learn than just my video. Why should you have more than one currency? How many currencies you should own or earn money from very much depends on your goals. At a minimum, it's about the safety of your earnings and savings. Safety here means a guarantee that the amount of money that you own or earn will be able to keep a certain level of value, a stable level of value in the years to come. Simply put, if you live in a country which scores high on all the trust factors that we've talked about earlier, then you'll probably find in this country with the way the currency is going to evolve and if you earn money in that currency. If you see that the trust indicators are not as good as you would like them to be, then consider diversifying the type of currencies that you own. If you're investing, it's about the level of diversification that you want to achieve and also inherently the level of risk that you're ready to take. For understanding the type of investor that you are, please check out this video here and here where I explain what are the different parameters to know the type of investor you are. If you want to build position in currencies like you would do with storing gold, for instance, then you're most likely aiming for stability. If you want to build reserve, but at the same time you want to bet on the future of currencies and how they're going to evolve upwards, then you might be interested in more exotic currencies. The level of stability of a currency also has an impact on the interest rates that you can expect if you own that currency and you lend it. And it's the same when we look at the more stable the currency, the lower the interest rate. You can also do short-term trading of currencies, that's forex trading. I'm not a specialist of that, so I'm not going to talk about it today. Do your own research if you want to do this. This is high risk profile type of transactions. What currency should you get? We've covered the different type of goals that you might have in the previous question, so the type of currency and the currencies you might own might depend on those goals. Out of all the trust parameters that we've looked at, the 4 trust parameters, this is the list of countries where their currency and the countries themselves are having 3 to 4 of those parameters of trust in the top 20. You have the US dollar, the Chinese yuan, euro, the Japanese yen, the Korean won, the Indian rupee, the Singapore dollar, the Swiss franc. If you're worried about short-term inflation or you're worried actually that your main currency is going to suffer long-term inflation, then you would want a very stable currency short and mid-term. For simplicity, let's look at a few that fit the bill and we will compare it to the world reserve currency, the US dollar. And for that, nothing beat the Swiss franc. Again, the US dollar, it has gained value over the past 20 years. Not much interest you can get, but that is to be expected with such strength. Another good currency in terms of stability has been the Singapore dollar, which has been also appreciating against the US dollar. Chinese yuan is not bad either, or the euro, and of course the US dollar. If you're more interested in mid to long-term performance of currencies and performance of assets in those currencies, then it's important to look at the power index from Ray Dalio chart and look particularly at the arrows about whether the empires or countries are going up or down. Then the focus should be on the Chinese yuan, the Korean won, or the Singapore dollar. If you like it volatile but with high potential return, then the most important of the group is probably the Indian rupee. And I would say that it's more predictable than 2 other candidates of volatile but high return, which are the Russian ruble and the Turkish lira. Now, one point to remember is all fiat currencies in the past have always ended up almost worthless. It takes time to get there, but history has shown that it is a certainty. For example, check the purchasing power of the dollar in the past 100 years here. That is why people sometimes want to keep gold as a store of value. And you can see the evolution of the US dollar against gold in the past 50 years as well as the USD, which are currently in circulation. It clearly shows that the price of gold has been closely related to monetary expansion or retraction. So gold looks like a neutral measurement of value. Other people believe that the only way to keep the value of money is actually not to be dependent on government fiat currencies and to be able to depend on decentralized type of monies. And here we're talking about cryptocurrency, and the most famous one is Bitcoin. Here you see the historical performance of the US dollar against Bitcoin. Super volatile, but an interesting building of trust over the past 12 years. How should you hold your portfolio of currencies? Keep it in cash if it's for short-term use and for small amounts. Make sure that you keep them in a safe, so, secure. If it is for investment, you can use investment platform like Interactive Brokers, like Charles Schwab, TD Ameritrade, Robinhood, there are many others. They allow you to own currencies, securities, stocks, sovereign bonds of the currency of your choice. The most secure way of owning some of those currencies is obviously cash, but the second most secure and interesting way is to use sovereign bonds in the currency from the state. The only reason not to do that, and if you are with a country which is actually going to give you a negative interest rate. If you want to own specific companies with a specific currency in that specific country, then do your own research because there's a lot of variability in terms of the quality of companies that you can buy. An easy way to get access to a stock market of a specific country, let's say Singapore, is to go for the specific index, which is made of the top 50 companies, for instance. If it is gold, there are some specialists in the market that you can look at which can allow you to buy gold and actually store it for you. If it is about crypto and Bitcoin, then do your own research. You can have a number of platforms which are available, but it's quite volatile right now, so make sure that you focus on the ones which first are in good financial health right now, and also that give you plenty of transparency about what they're doing to stay afloat. If you want to know more, you can look at the less risky assets in various currencies with looking at this video here and here about how to invest in classic assets. If you prefer more high-risk perspective in going into certain currencies which are more high-risk, then check out the exotic assets here and here in this video that will tell you about ways to invest in currencies which are a bit more risky and assets which are a bit more risky. Hopefully the video today was interesting for you to learn more about currencies that you can own and how you can diversify the risks that you have in your portfolio, or even actually make more money out of a diverse portfolio of currencies. I look forward to sharing more about personal finance and coaching in a cup of coffee last week with you.